So, Maya Blue, the latest freehold development in District 15. Do I think it's a good buy or not? Let's find out. So this is the third episode of our brand new series where we analyze the exit strategies of the developments that you request for and rank them against one another. So if there's a particular development that you are interested for us to analyze, please put them down into the comments below and we'll analyze them and rank them against all the other developments. Maya Blue is located in perhaps the most prestigious address within District 15, Maya Road. It sits on the former site of Maya Park that went en bloc in 2023 after its third attempt, and the plot has been purchased by a joint venture between UOL and Singland. The project is going to be launched in the next month or two, but despite that, there isn't much information available on the market at this point in time. What we do know is that it's going to come up to about slightly over 200 units, below 300 units, so not particularly big as a development. On that note, we're going to find out later on if that's going to be a deal breaker or not. So the developers couldn't have chosen a better time to launch their project, given that the Thomson East Coast Line is going to be opening up very soon. Now, despite its prestigious address and locale, the Maya area has its fair share of complaints, such as a lack of amenities, the lack of transport, and also the lack of good schools. So the opening up of a brand new MRT, albeit not terribly close to Maya Blue, is still going to bring in a lot more attention into the Maya area. This is our exit strategy framework. If it's your first time joining us, please do check out our very first video where we explain in great detail why we choose specific data points to evaluate the exit strategies. I'm going to put the link to that video somewhere in this video or in the description below. Here's a couple of important reminders with regards to the exit strategy framework. Pointer number one is that it's best utilized as a basis of comparison. Take for example, there's 3 to 5 developments that you are currently considering, but they don't necessarily have the same attributes. They may not even be in the same location. Now, a lot of people have trouble then deciding which is the best for them, which one has the best exit strategy, which one can make the most money. And that's the reason why I came up with this framework, to try and allow us to compare different developments with different attributes on an apple-to-apple basis. Pointer number 2 is that the scores that you see over here on an individual basis don't count for anything yet. There's no passing grade or failing grade. The reason for the scores is to allow you to easily compare the developments on an apple-to-apple basis. And for the purpose of this framework, the lower the score, the better. Coming back to the point of me saying they don't quite mean for anything yet is because this is still a work in progress. It will become more and more robust the longer time we have and the more data that we have. On that note, I'm very open for suggestions, feedback, comments so that we can make this framework better together. So put all your comments, all your feedback down into the comments below, and I'm happy to hear them. And let's work together to make this framework more robust. So without further ado, let's dive right into it. In our newest column, we have Maya Blue, and for the purpose of comparing the developments on an apple-to-apple basis, I'm utilizing 3 bedders, right? So previously, we were evaluating the Hill at One North 3-bedder and also Chuan Park 3-bedder. So for today, we have Maya Blue 3-bedder. Over here, we have put in a estimated entry PSF about 3,200. And works out to a quantum of about 3.2 million. Likely this will be close to a 3-bedroom premium. So for the very first data point, we're going to try to understand the demand within a particular area. And the best way to do this is utilizing average profitability per annum. The reason why I utilize this is because if an area has strong demand, it likely leads to strong and healthy transactions, and the result of which will appear as good average profitability per annum. Let's take a look. So for Maya Blue, within 500 meters, the developments average out to have a 4.2% average profitability per annum, average annualized returns. which is surprising because it's slightly lower. It's lower than Chuan Park, but it does better than the Hill at One North. Let's take a look at the developments that we are considering. So over here, within 500 meters of Mayer Blue, we have the more boutique. First mentioned doesn't have much data and transactions. We have our big brother over here, the Makina. Is a freehold development. The three bedders average out to about 2.7 million. These are transactions within the last year. Very, very healthy. As you can see, basically one transaction every month. Yeah. The average annualized profits is 5%. Okay. Then we have slightly smaller developments side by side with Mayer Blue, right? Mayer Rise, Mayer Mansion. Mayer Mansion is a new launch, haven't yet TOP, so we don't quite have annualized profits over there, but I do expect them to perform quite well. We have Mayer Rise, average annualized is 3, Seafront of Mayer is 3, the Belvedere at 4. Now, here's a thought that I have. I do actually think Mayer Rise, Seafront at Mayer, and Belvedere should do better than this, but the reason why we don't see that their performance is fantastic is because a lot of owners bought it. They were launched in the pre-2013 eras. There were quite a number of owners that bought in that period of time as well, so they bought it at a high. So it's taken a while for it to really start coming up and meeting I would say market averages profits lah, right? And given a longer enough time, as you can see, the older the development, they tend to do better over here. We have, you see, Hawaii Towers at 7%, Atria and Mayer at 6%. And you see even older ones that tend to do better as well. Margate, for example, over here. Yeah, some of the older ones, even some of the more boutique ones tend to do better as well. So now this comes back to my initial point, is the low number of units, right? We tend to prefer developments that are larger in size. So 200, it can be considered quite small, but you're not significantly smaller than your neighbors, right? They're all thereabouts that same size. It's located in a good area, and as you can see, the profitability is not too bad. So it having just 200 units is not a deal breaker for me. So now as we average all of this out, all the profitability, annualized returns of transactions within 12 months of developments within 500 meters of Mayer Blue gives us 4.2%. Next up, we want to analyze the supply side data. So for the supply side, I utilize two data points. The first data point, we have already talked about it earlier, which is the total supply of units. This means the total number of three bedders built within 500 meters of Mayer Blue. Again, as we can see over here, Makina offers the most number of three bedders, 419. They average out to a size of about 1471 square feet, followed up by Seafront at Mayer, the Mayer Rise, all offering about 100 to 200 three bedders. And this is the average size that you can see, which tends to be, and is probably going to be bigger than what we're going to get over at Mayer Blue. I expect it to be about 1,000 to 1,200 square feet, because I don't think they're going to be building one bedder, so that's going to allow us to have slightly larger floor sizes. I think the closest comparison should likely be Mayer Mansion as well as Live at MB, the most recent launches in and around that area. Okay, so tallying all of this up gives us 1,458. The next data point that we are going to see is current units for sale. And this is what a lot of people kind of miss out on. They look at units that were being built, and if they see a lot of condos, they have the concern that it may be oversupplied. But I like to take a look at what are the current units for sale, because that gives us plenty of perspectives. So now follow me. First of all, we zoom in the Mayer area. We can see there's just 50. So out of 1,458, we have only 53 bedders for sale. And let's take a look at the price points, okay? So the cheapest one we're going to get right now in the market is, hold on. Let me go back to the first page. 8M Residences, but it's quite a tiny one, 893 square feet at 1.9. And then we have also the boutique Santa Fe mansions, 2.2 million for 1,000 square feet, 1,000 square feet, 2.2 million. Then we have Santa Fe. Then we have the Makina over here. They're already coming in at 2.4 million. We have all this Mayor Park. There is a advertisement listing for the new Mayor Blue, because Mayor Park is already on block. Then we have here 3-bedders at 3.1, 3.2. So very quickly it goes above, right? So there's not many options below the 3 million mark, and especially if you want some of the slightly larger developments, like your Mayor Rise, your Belvedere, all those, right? You don't really get them under 3 million, as you can see. As you can see over here, right? 1,500 square feet Makina, 3.2 million already. So a lot of them. And then very quickly, once you go into the second page, they very quickly go above $3.5 million already. So if you're asking me, I feel an entry price of 3.5 and below for a brand new sea-facing unit. Even if you don't get a sea-facing unit, you get the north-facing units. They overlook the landed. Also very good. Anywhere less than 3.5 million, I feel, to be honest, it's a pretty decent entry price. We developed then the supply ratio, which is basically to try and tell us how strong is or what's the risk of oversupply in the particular area. So on this note, the lesser the percentage, the better, right? It can tell us that despite many units being built, there's not many sellers selling. So if you want to buy, or next time as a seller, if you want to sell, you have lower risk of oversupply, and probably you have more bargaining power to ask for higher prices. And comparing them across the board, this is where it's quite interesting. Compared to Chuan Park and The Hill, we do actually have a higher supply ratio. That means more units for sale given in a particular area, which is why for an exit score, it scores 82%, which is higher, right? Higher means not as good as The Hill at One North and Chuan Park. So if you've benefited from this video and you enjoy the data-driven approach and you appreciate the amount of research that we put into each and every video that we do, please don't forget to like and subscribe, as you'll help out the channel a ton. Now back to the video. And now let's move on to the second part of our exit strategy analysis. And for this part, we are taking a look at surrounding quantums and PSFs. So the average surrounding quantum over in the Mayor area right now, it's 2.857 mil for 3-bedders. And how we get that data, you can see over here. The Makina hovers about 2.7. But the interesting thing here is this, right? I believe this is an important nuance for us to understand. The more similar kind of developments to Mayor Blue down at the same stretch, right? You see the average comes in at very, very close to 3, as a matter of fact, above 3 million. Okay? But then again, why the average only indicates 2.8 is because we have the slightly smaller boutique developments that are actually located slightly further in from the Mayor side, closer to the Fort Road side, right? They are the ones kind of pulling down the averages, right? But again, I still have to put all of them in for a more robust analysis, but taking the chance over here to sort of share a bit of nuances so that you look at the numbers objectively, okay? So we have 2.857 as the average, 2.9 million as the median, and 4 million for the highest achieved quantum so far, coming in from Hawaii Towers. The next data point we're going to look at is average surrounding PSF. So the average surrounding PSF hovers at 2,000. Again, coming in and taking a look at that. It's very similar to quantums, right? The average surrounding PSFs, I feel, are being sort of pulled downwards, right? By our more boutique apartment style developments, as we can see over here, as well as some of the older freehold developments. The more like for like ones, I say, should consider something like these, and also live at MB, right? As you can see, it's about the 2003 all the way to 2006 PSF lah. But nevertheless, putting into the framework, right, we have 2000 over here, 2000 over here, 2006. Now for the gaps, right, the gap to average, right, and all these gaps means we are taking all these assumptions that we have over here, 3002 PSF and 3.2 million purchase price. What are the gaps? We are 1000 PSF above average, 500 above the highest achieved so far. So on this note, this is something that you're going to have to accept, right? But if you dive into it and look into it in greater detail and comparing it to sort of closer comparisons, it may not appear as much as this. But regardless, this is the score we're going to get, and as we compare them across the board with one another, it's not going to be as high as the previous two that we see, right? Utilizing just this analysis, similar to the exit score. So now coming in with the scoring, if we look at the exit scores, Mayer Blue is going to rank third out of the three that we have. And in terms of gap score, similarly, it's going to also come in third place. Now, again, right, this doesn't mean you're not going to make money from Mayer Blue, right? It just means utilizing this consideration in terms of exit strategy. Those are some of the points that you need to take a look at. And if you're only zooming in at the exit strategy, utilizing the different points, the other developments will look better for you. So as we come to the end of this video, what we have done over here is a very surface level analysis for the purpose of utilizing this framework to compare different developments on an apple-to-apple basis. But I do have intentions to do a more in-depth one. As you can see, the particular area in Mayer is extremely nuanced. Right? In our popular 3 things we like and don't like format, once more information is available. So please don't forget to like, subscribe, hit the bell notification button so you're informed when that video is out. So if you'd like to take a look at some of the research that we have done, feel free to drop us a text or click on the link below, key in your details, and we'll be happy to send it over to you. So if you're like us and you appreciate a more detailed, data-driven, research-backed approach to your property purchase, what you see over here is really just the start. The surface level research. We go into much deeper level with our clients. These are some of the examples of the things we consider: size of development, transformation, new plots, age of development, rental yield, especially for those of you who are investors. For those of you who are also considering it for own stay, now that's the tricky part. How do you compare different areas on an apple-to-apple basis, right? Factoring things like schools, MRT amenities. How do you score them? How do you rank them, right? And for those of you who are looking to grow your portfolio, right, which ones have the better holding period? Portfolio sizing. Are you optimizing your portfolio size? What's the opportunity cost between, buying a new development versus buying resale? This framework works as well by comparing new developments and resale developments, right? And then exit timing. How do you time your exit in greater detail? We are developing also a framework to tell you when's the best time to exit your property purchase. And once you have zoomed in on a particular development, right, how do you go about comparing the competitors, right? Especially important for this Mayer area that we have seen is so nuanced. If you just look at it in totality, without diving into the nuances, you may be scared off by the sheer gap between quantums, the sheer gap between PSFs, okay? But in my opinion, it's still a good development, solid fundamentals to pursue. But you need to be able to find the correct data points to compare to, okay? Of course, then we take a look at the layout analysis, comparing across the board. Can the new layouts stand out? Because we have seen before that depending on the layouts of the developments, right, even if they are in the same area, the layouts, if they are better in terms of facing, in terms of space utilization, they can perform much better than the surrounding developments. Okay, stack selection as well as PSF gap within the development. So there's going to have one more layer in terms of your entry and exit strategy, right? Comparing the PSS within the development itself. So if you can resonate with all of this, you would like us to do this for you as well, feel free to reach out to us, click on the link below or drop us a text, right? If not, we'll see you for the next one.